Good morning. It's Market Day Report. We're up and trading. Market's been open for 15 minutes. You know, before we jump in, biggest regrets. Have you had any regrets in your life? It was Northwestern and the University of Illinois, Urbana-Champaign, gathered together and they came up with a list of regrets that people have. We're going to share those with you throughout the morning. Hopefully you're not a victim of any of these regrets. What about the corn market? Is it regretting running up? Well, I don't know. Right now we're just stuck in this tight trade range. It's a little over 6 cents right now, but 502 3/4 on that March contract. Then you slide down to the December, the front month of the new crop. It's 488 3/4, half penny lower. So we just continue this 3-day slide for the corn market. Soybeans, yep, we're lower here, down 2 3/4, 11.90 3/4. We go to the wheat market, and we'll start with Chicago. It's 6.5 lower, 6.54. How about hard red? 6.93 off 5 3/4. Finally, the cotton market. It's been lower too now. 3 sessions, 81.53. It's down 143. Said the whole regret thing because our next guest, I don't know if you're regretting last night yet, but he's with EmpowerAg Trading. Brady Huck. Played a little softball last night, didn't you?
Good morning, Tony. Yeah, I coach my boys' 10-year-olds in youth baseball, but last night I got to step up to the plate myself and played a little softball, and I woke up a little stiff this morning. I remember it's not as easy said as it is done, so I may be a little easier on my 10-year-olds going forward because it's kind of chaotic out there. But good times, and I don't regret doing it. And don't want to go too deep into all my regrets on national television, but I guess if we're a producer and we're on the regret train, let's hope we don't regret not rewarding this rally. This market's just chopping around, waiting on that next move. The bulls were starving for a new story right now to make that next leg higher. Had a little blip overnight with the crude oil market. Crude oil jumps $5 off of its lows. It was trading about $5 lower than where we are right now at 5 in the morning. So Iran apparently wants to keep some of its uranium reserves, and that leads to doubts that we're anywhere near a peace deal there. Lots of volatility in your energy markets that bleeds into your grains. Grains caught a little bit of a bid on that action, but really, to me, it comes back down to non-threatening weather in the Corn Belt. We need a story of a production problem, and we need some demand realization of strong demand coming out of the U.S.-China summit last week. We've got some headlines, but do we have any action on that front? So we talk about weekly exports, and Brian Hoops did a good job covering that in the earlier segment, but solid week of exports here for corn. Beans and wheat were right in there too. So just need another story to keep driving this market and send this market higher, Tony.
Yeah, Brady, I just wonder again, we're stuck in the headline cycle here where that's what's going to drive the markets here. Headlines drive the crude market, which then drives the commodity markets. If we get this thing cleared up in the Middle East, does that headline trade maybe not disappear, but just subside a bit?
If we get the crude situations resolved in the Middle East, it certainly does. But I don't anticipate that to go away in a dramatic fashion overnight. I think that's just the world we live in right now. I think it has to do with a lot of the administration that we have right now, where we're going to have volatility. We're going to trade tweets. We're going to trade headlines. And if you get caught marketing in positioning yourself relative to those tweets, they may not age very well because they can change very much the next day.
But it goes back to the point you made to start this conversation, rewarding rallies. Whether or not you believe in whatever the market is trading at that point, when there's a rally there, you've got to jump in, right?
You got to do something. Yeah. And I don't think you want to look back and regret that you didn't do anything when the market was put that premium in. As we progress throughout the growing season here, Tony, we're going to know more about the size of this crop. We're going to know more details. That uncertainty will come out of the market, and whether or not you believe there's any risk premium in these markets today or not, that risk premium will change and potentially go away the more we know about this crop going forward. A lot of weather ahead of this crop, though, Tony, so we'll see how it all shakes out going forward. But when you get those chances, don't hesitate to take a swing and try to knock one out of the park.
All right, speaking of knocking it out of the park, it's been home run after home run and then grand slam for one market that's been on a bull run. Will it continue? We'll find out next. This is Market Day Report. What's happening in the livestock markets? Well, you know, we there for a while would start lower and then end the session higher. Or if we started higher, we'd end the session lower. Well, the last couple of sessions, we've had to throw that whole idea out. Right now, live cattle are in the red, 252.55. It's down 72. $1.60 lower on the August contract, which trades 243.70. We're in a $2.50 trade range here, but just not really finding, the market's not finding a reason to push higher at this point. What about feeders? You know, we were higher yesterday, but give those gains back already this morning. August 361.45, it's down 432. Some movement there in the May contract, but it expires today, so we're not really focused that much on the May. The most active here is August. And then hogs. Had a really good export sales report for hogs, but market not rewarding that at this point. 96.50 on the June, it's down 77. Brady Huck's with EmpowerAg Trading. Didn't mention the cash trade, which yesterday Nebraska had at 265, dress 415. That's a long way away from where we're trading futures right now. Is somebody right, somebody wrong, or just not agreeing on where we're going?
I think eventually those things may come together, but they certainly don't have to right now. So you look at the cattle market, though, and the cutout, we're holding in that 390 level, haven't really pushed to a new level above 400 on the cutout. Cash remains firm, so that's solid. The market on the cattle side of things really is just hanging in there. We're off the low end of the past month's trading range and just chopping around, waiting for that next move. Tomorrow we will get the cattle on feed report on Friday, average estimates for the on feed number to see an overall increase of 1.4% versus year ago levels. That'll be the first year over year increase since last, I think it's 18 months ago, November of 24, since we've seen an overall increase year over year in the on feed number. Marketing's anticipated to be down around 10%. Placements, that's where the big surprise could potentially come. Estimates are for that to be down 3% with a big range from anywhere from down 4% to up 8.5%. So any surprise likely comes in the placements figure, and we certainly hope it's not a bearish surprise. But we've got a 3-day weekend for the market to kind of digest this report. That can sometimes soften the blow. There'll be plenty of headlines to digest over that 3-day weekend, and we'll see what gets printed tomorrow in the cattle on feed report, and if it's any surprises in there.
Okay, Brady, I'm going to that on feed number here, and I'm trying to remember who I talked with earlier this week, but the question was, if we keep extending the days on feed with the introduction of the beef on dairy cross, because normally we're feeding what, 180, 160, 180 days, but you put the beef on dairy in there and we're expanding that to over 200 days. Will that affect our on feed number?
I think it does. That's a good point, Tony. Yeah, as you make these animals bigger, you push for higher weights, and then the genetics, the beef on dairy component of just the different type of animals that take longer to feed, it kind of skews the overall on feed number and how fast those animals get to market, or I guess how slow that they get to market. So definitely impacts some of the data there, and maybe doesn't underpin how tight the supplies actually really are.
Okay. We started it with regrets and not having you throw out the biggest regret in your life, but any idea what one of the top 5 regrets for most people is? Any thought?
Gosh, I draw a blank. I don't know, Tony.
I'll give you a hint. If you woke up sore this morning, it deals with health. Yeah. So
Not exercising, not taking care of your health potential.
That's exactly it. So guess what? You're not going to have any regrets for playing a little softball last night. By the way, enjoy the kids while they're still young. Okay, it's Brady Huck. He's in Dodge City. EmpowerAg Trading.